Hello, traders. It's 8:02 a.m. Chicago time on Wednesday, the 24th of April, 2019. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market sentiment, we start every day looking at the overall market sentiment. We have a mixed market today. The bonds are up 20 ticks. That's a lot for that product. Followed by the DAX as the next leader at up about 50.5 points or 0.4%. The Bund is up 62 ticks. Again, it's a lot for that product as well. And the laggard today is the Euro stocks. Go figure. It is down 0.23%. The S&P is down 1.5, so flattish. We continue to trade in the point of control from yesterday. I'll cover that in a minute. The NASDAQ's up one tick currently, or unchanged, basically. So we have a mixed sentiment coming into the day session from Globex, and that's our starting point. As far as what we're looking for in terms of releases, the calendar is free and clear today. We do have the Canadian interest rate decision about a half hour after the open, and then we get crude oil inventories expecting a surplus of 1.255 million today, and gasoline inventories expecting a draw of 1.042 million. We also get the Bank of Japan rate decision that's at 11 p.m. Eastern this evening, and that clears up the calendar for the day. Pretty quiet. Tomorrow, just to look at what's ahead, tomorrow we have durable goods in the U.S. as the key figure, and on Friday we get GDP, which is quite significant. Very light week on the calendar, with Europe having been closed on Monday. It's been very sluggish, and then we really made up for it yesterday with the big rally in the indices. Let's take a look at what we expected yesterday versus what we got. Yesterday, the primary scenario was again to dip down into the prior range. Look for 29.10 to 29.12, and then to push to about 21, or on the secondary scenario, which is also bullish. That scenario just looks for an open auction out of range, and given that it doesn't dip into the prior range, we expected a higher outcome or a higher high at 29.22. The thing is, I'm going off of the current volatility. There's no way to predict that we would have a day where it suddenly decides to go 27 points or whatever. We've been trading generally the historic volatility for the ES close to close at current rates is it's 13 points. 13 points is the normal range, close or movement close to close. That's the 1 sigma event. Compare that to what we had in December. December got as high as 52 points per day from close to close. The volatility's collapsed quite a bit, so I'm always conservative with my upper targets, and they're in line with what I expect to be the day range. In this case, about 12 points. We got 27. So that's that. So the expectation, as I said, either dip down into the 10.5, 12 area and push up into 21, or hold the open in an open auction and push to 27. And what we got yesterday, clearly we dipped down. Well, let me shrink this a little bit so it can fit in here. We opened up, dipped into the range. We went to the prior close here at the 1275. We had an impulse up to 19. So at this point, we're looking at an open test drive opening type. It's really important to identify the opening type. An open test drive is the second most trend-like or strongest opening type there is. At that point, you start to not consider the short side when you see any kind of drive, and our focus becomes a lot narrower. It becomes easier to trade in a sense, in that all we're doing is focusing on what areas can we can we look to get long with a reasonable amount of risk. That first area was the 17. That was a clear, clean trade setup based on the impulse from 12.25 to 19 and a shallow pullback with a collision in the order flow. And from there, off to the races we go. We extend the IB high, and then we have another big impulse of 12.5 points, and then we're simply not going to back off of the long at that point. If you look at the rotations, this bottom pane here on this chart is showing rotations. You can see the rotations down before the retrace are a lot shallower than the rotations up. So up rotation 6 1/4, down rotation 2 1/2, up rotation 6 1/4, down rotation 2.75, and so on and so forth. And so when you look at these red bars down here, you can easily detect that early on the buyers were gaining much more ground and were doing a much better job of holding territory than the sellers, because the counter rotations were very weak. Rotations are like taking, I always say, rotations are a bit like taking the pulse or the blood pressure of a patient. They give you a metric that measures in the moment where things are relative to each other, right? So this is what we got. The delta was relatively strong yesterday. I'll show you the volume delta, and you can see the participation was across the board on this rally. Once we got through the dip down and we had the impulse to 19, we could see that very large lots are participating, and they continue to participate on the long side all day long. Very strong push into the close by the very large lots. These are 100 lots or higher per trade. Overall, the market was in line, or the delta was in line with price. And again, that's the environment where you want to hold on to longs if you can get them. Okay, we finished up. So what is the profile condition? Profile shape. We finished up with a profile that really looks super thin. Volume was a little light given the range that we had yesterday, and the profile was so thin. I mean, it's like it just could not rotate long enough anywhere, except once we got to 2940, which is a stock zone up here. 3950 was a stock zone from yesterday. Once we got up here, we started to rotate, and we moved the point of control to the high. Now, you can see the point of control moving from here to here. That's what those little dotted white lines are. They're tracking the developing point of control. And of course, you can see that the developing point of control is just shifting up constantly throughout the session if you follow those white dots. So what do we have? We have a profile where the point of control, first of all, no consensus at all. So a price discovery profile. The market could not find any prices where it executed volume, any meaningful volume throughout the range. And then it found its sellers up near 40. We can see that in the rotations when that happened. And then it rested up here. It pulled the point of control to the upper end of the range. And the expectation under these kinds of conditions is that we would continue to float up in the overnight session, which we didn't do very well. We took out yesterday's. We actually didn't take out yesterday's high. We stopped right at yesterday's high of 39.75 in the overnight session, and have tested down and have held sideways. The point of control is just above current prices at 37.75. Kind of a weird, not disappointing, but kind of a weird, odd close that could not find any continuation yesterday. Tons and tons of single prints yesterday. If you look at yesterday's market profile, look at this thing. It's just, it starts out in B period right here. We have single prints there, 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 and there. Just a lot of single prints. This traditional market profilers would say, yeah, this calls for repair at some point. So the expectation there is the market's likely to come back and re-auction those areas to determine if there is true buying interest still, or if sellers might come in and push it down. In either case, we have a bona fide trend day up with an open test drive opening type. It has all the pieces of a trend day. Notice that the price stayed well ahead of the point of control, well ahead of the VWAP, and well ahead of the mid. You want to stay away from shorts yesterday. As I said in the Convergent chat room very, very early on, once we saw the 19 impulse warning to shorts, stay off the short side. Hopefully many of you did, many of you who understand the auction. So from there, we go into the overnight for our review. The overnight goes sideways, and then we start to draft down. The Asian markets faltered a little bit. It's been being attributed to the fact that stimulus is being slowed down by the Chinese government. And so their market was pretty flat until the Europeans came in. The Europeans came in right in here, and we've gone sideways and pushed up. The profile is almost a double distribution profile with a weak high and a pretty decent taper on the low into the single prints at 32 from yesterday. So we're holding just above the mid, just below the point of control, and right in the VWAP area. This is a noisy area to open in this morning. So take that into account, that we are likely to open right here in the point of control area, and that sets us off for the session. So let's look at what we've got for today. But I want to take a moment and remind you that tomorrow I'll be talking on Futures IO. I'll be going over the micros. I'll compare the micros to the minis. We'll be talking about margins, the specs, margins, costs. Costs has been an issue. I've received quite a few messages, emails, PMs on Twitter suggesting that the product's too expensive and all that. That's one of the items I'm going to be addressing. Please register. You have the registration link on the TraderByte page on convergenttrading.com. If you're looking at it there, at the top, there's a block you can click on anywhere, and that'll take you to the registration page. You also have the registration link in the description of the YouTube video. So if you're watching on YouTube directly, just look at the description. The link is there. And of course, it's right here in front of you. Go to ct.pro and FIO-micros-4-2019. It is case sensitive. So make sure you register for that. If you do go to Futures IO and try to register and it says you have to be an elite member, just ping me on Twitter, twitter.com/FuturesTrader71, and I'll send you the right link. Our link does not require you to be an elite member. So what do we have for today, since I'm running out of time? Primary scenario today is, remember, trend days are like sprints up a hill for the market. So trend following trend is quite rare, except on news events, elections, things like that. Generally, a trend causes some exhaustion, but it also generally takes us in the S&P. Generally, it favors taking out the high and putting it a higher high and a balanced day, usually neutral or just a normal variation balanced day. And so today I'm looking for an open that is an open auction in range right against the point of control. I'm expecting the market to test up in and through 39.75, take out this 40, push into 42, and then come back in and basically give us a balanced day. May test all the way down to 33, 32. That'll give us 9 points of range or so and finish in the middle. This is this bias, or this scenario, is based on how it traditionally behaves. As always, the market can do whatever it wants, and it can always surprise. It can always surprise us, right? So just be prepared with what you want to do in your stops. The second scenario is the opposite. We're looking for an open auction that drifts down and starts to tackle some of these single prints. If we do not get a bounce, once we get through this into this 32, into the overnight low, if we do not get a bounce up, then this could easily float down into 24 and 23. for target to the short side. If we do get a bounce up, and this should be scenario 3, but I don't want to complicate things. If we do bounce up, we're back at the open. We're likely to take out this 39.75 and push again into the 40.42 area. That's the secondary scenario. Unfortunately, it's got 2 heads. Okay, so I'll leave you with that. Again, don't forget to register for tomorrow's Futures IO webinar. It's at 4:30 Eastern. A lot to share with you. It's chock full of information to prepare us all for the May 6th launch of the Micro ES, NQ, YM, and RTY. Good luck.